So, welcome to the next video. In this video, I will talk about the only trading strategy you should think about if you are new to trading and you are start. So, as you can see, here's my chart. You can also see that I did some scalps here on the Nasdaq and some profit, but this is not a strategy that is for beginners. This is scalping where you read the tape and you cook on the order floor and you cook on the footprint chart and what is happening, but this is not beginner friendly. So if you're a beginner, I want to show you one thing that happens every day in the market and you can trade after that, and it is pretty precise and it's just a little information from my side. Obviously this is not a full strategy, so you have to pack other things into that to make a full strategy out of that, but this is a key setup that happens every day and you can trade after that. And basically what I'm telling you about is a fake out. So you fake out the market. So you look at here at the highs. I can also make a line for you, and basically the market goes over that high and it fakes out, it goes back, and after that we see a short. You also can see the same thing here. The market overshoots this high and goes back down. So this is pretty simple, but you have to watch a lot more that is in the strategy. And I will also tell you, don't trade the Nasdaq in the beginning. Start on the S&P 500, start on the ES. And you can also see that the ES is way less, or how to say, it doesn't happen as often on the ES with this overshoot, because if we look here at 2040 and then we go to the Nasdaq, okay, bad example, but usually, or you see it here, it's a good example. So as you can see, the Nasdaq at the ES didn't overshoot at all here. Let's just mark it here. It didn't overshoot, but the Nasdaq overshoot here at the same time, as you can see. So this means the Nasdaq is faster and it takes out the stop losses even more than on the ES. So I will not tell you to trade on here, but it obviously also happens here pretty nicely, but you need more stops. So the Nasdaq just starts overshooting a lot more. But if you look here back on the ES, you will see that if this happens, it happens pretty awesome. So as you can see here, we have this high, the market overshoot, and it closes back here in the area and it doesn't want to go any further. So now you can look after the short, but let's just go one day back. I only have one day in here. Let's change that. So let's go back. Basically this happens every day and you have to look at the market and have to be patient. As you can see here, same thing here. Market comes back down here, but it didn't overshoot, unfortunately. So it's not only in the fast. So let's look at here. Market here overshoot, comes back down. There was not a huge move that came after that, but you can also see here the strong rejections, but the candle didn't come back down. So probably not a good rate. So as you can see, there are different parameters that you can look into and use while trading that. But yeah, let's go to the market open. Okay, market open yesterday was very strong in one direction, so you wouldn't get any trade here. Oh, I'm blind or what? Here you can see the overshoot. The candle closes back down in the area. So if you look at it like that, you basically see this channel here. This is so one of the biggest points you have to understand as a beginner is that trading does not happen in line. So there's not a line. Trading happens in price areas. So if you look at a chart, basically you can define the price is between different areas and then it breaks out of that area, comes to another area, and then it stays there for a longer time. Obviously there's a lot more to that knowledge, but basically at the gist of it is, if you have huge amount of contracts that you have to get into the market, obviously you cannot just say, oh, here at the price of 6321 I want to buy, and then 1 million contract, as a stupid example, is bought right here and then market does whatever it does. Obviously that's not happening for the big banks. So if a big bank wants to get into the market, obviously it needs a range of price to get into that market, and you will see that if you look at it even more. So here's the same thing. You basically have the range from all of that. The market just ranges in there and then it leaves this range and comes to the next one. And this basically happens every day. You obviously also see it if you zoom in on the smaller time frames. And obviously I'm now on the 1 minute candle chart, which is very small, but I just want to show you. So if you think about it now, here is a smaller area. Basically here is some positioning happening, and after that is done, price leaves to the down or upside, and here it leaves to the upside, and it moves through this area of price, and then it goes back down where the value is. Probably the VWAP is also coming up here more and more on this chart, but that doesn't matter right now. So come back to the setup. The thing is this, as you can see here, I make it bigger. Price leaves this area. Let's make it big. So basically we have here this price area. Where the reason basically is not important. You don't have to think about the reason right now. The only thing is that this is an area where price seems to be interested in, and it accumulates in this area. And then suddenly the market leaves this area with a lot of momentum, as you can see. But you can also see that they took out the subs probably to the downside in before. But let's just leave that out. Basically, market leaves to the upside, leaving this channel behind. But then suddenly there's no buying happening anymore, and the market comes back down into this area, and the candle closes in this area. Market comes back to test it and then comes back down. And basically that is the basic strategy. So as you can see here, if you will trade it back half to the area, it will be 24 ticks on the ES, which is not that bad. Yeah, obviously there's way more to it, but I just wanted you to see that setup. Here you also see it. Market goes over the last high, and it has no interest in going further and ends up going backward where this area of price is traded. Let's go a little bit further back. I'm looking for a setup where we are not in the market opening. Here you can see it, a setup in low volume. Obviously this is before US market opens, and you can see the market goes behind the back low, and it doesn't find any more sellers and comes back and closes even in the green. So here's the long you can take to the last high maybe, which would be 4 tick, or here if you see the market rejects 7 tick on the ES, which is not that bad in pre-market times. Let's go back one day further. Ooh, a lot of volume and volatility. So let's see what you can see here. Okay, this is an awesome example. We take out the last high, and market completely rejects that high, even does it 2 times, and then comes back in area of value where price has been trading the last few minutes. You can also see here some not so good examples, because market tested this back bad low 1, 2, 3, 4 times, and then the same thing happening here also last high. So as you can see, you have to look into some deeper analysis to find out how the strategy works. But this is just a small tip from me that you can look at, which is happening throughout the day, at least 1 to 5 times every day. Here you can see the same thing. Let's go one day further to the market opening so that you can see. I need one more day. Let's go back here to the market opening. You can see it one more time. So where's market opens at this time? Here is nothing. So yeah, probably with 1 tick. No, it didn't took it out. Here you can see one example later in the day. Market takes out this high and then goes on, going on further. But this day was a very bearish day, so maybe not the best example. But also in a part of price action, you can look after that, because so we make the new low, then the lower high, and then we continue going down. So basically, there could be a point that you could look after in forming your own strategy. But I think you understood the key thing that I wanted to tell you, which is this very strong signal of takeouts. Let's look at this day. Here's some news very in the evening. So market opening is here. If you look after that, we have a good example directly at market opening. We basically have here this range with these lows. Let's just make it like that. Does it fit? Oh yeah, it fit perfectly. So basically we have here this range. We have here these lows. Market takes them out and then comes back even twice, one more time, and the exact same thing is happening again. That's just very crazy to think about. And obviously you can see it also in a bigger move. It takes here to the higher, and this whole channel, if you think about that, so let's say we have this price area. Basically the market trades here and then comes back down again after faking out this whole price area. And yeah, this is it for today. As you can see, it works perfectly fine for me, and yeah, maybe it just helped you a little bit. If you have any questions, just comment below and I will answer them, and see you in the next one. Bye.